What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Tonight, I want to talk to you about the 3-day weekly day count that Stacy uses and the 3 days of breakout traders day count, all right? Because this causes quite a bit of confusion for a lot of people. I'm hoping to offer my own perspective on this in hopes of clearing up some of that confusion for someone, all right? But before that, as you can see, I have actually figured out a way to screenshot my computer so we can use these better charts. The only thing that we're sacrificing with this, because of the way I am recording these videos, is a cursor. I don't have a cursor, so that's the only thing we're sacrificing, but I will try to be as descriptive as I can while we're going through this so you're able to follow along, all right? And I'm going to do my best to keep this as simple as possible, all right? So if you're familiar with Stacy's work, you might see some things that I skip over a little bit, perhaps, right? And I'm doing that just to keep this as simple as possible for people who are new to this. All right, so I appreciate your patience with me in that regard. All right, so let's get into this. Last video that I made, we went over the weekly day count. Okay, it's very, very simple. It's a day count that never ever changes. All right, it's the same week in and week out. All right, and that day count is a 3-day day count, okay? It only goes up to the number 3. All right, so if you can count to 3, you got this. Don't worry, all right? This is how that weekly day count works. Monday is always day 1. Tuesday is always day 2. Wednesday is always day 3. Because this day count does not go past the number 3, we have to restart the day count on Wednesday, okay? So Wednesday is the only day that is a day 3, but resets as a day 1, okay? So Wednesday is always day 3, but being the midpoint range of the week, it's also day 1. Thursday is always day 2, and Friday is always day 3. And that's as simple as it gets. That's the weekly day count, and that never ever changes, okay? That day count is always going on in the background, basically. No matter what else you have going on in your chart, that day count is always in the background, all right? And because these different systems, these different day counts that are going on simultaneously, right? That confuses a lot of people. And Stacy says, if that is confusing for you, just trade day 3s on the weekly day count, which are always Wednesdays and Fridays. And what he means by that is when you come to your charts on Wednesday, when you come to your charts on Friday, those are day 3s according to that weekly day count, okay? So you're looking for a best trade setup on day 3s. We're always looking at day 3s for our best trade setup opportunities. So when you come on Wednesday, when you come on Friday, and when you're doing that, and even when you're using the other count, you might not get a trade every single week on, especially if you're just trading one market, right? You're not going to get a trade every single week on Wednesday and on Friday. That's not what's being said here. You're just looking for the opportunity on those days, all right? It might not happen. You might sit on your hands for a week or for 2 weeks. That might sound like a bad thing to you, but here's the thing. These setups are something that you will get used to seeing over and over and over again. You will lock it in. You will know exactly what you're doing. You will know exactly what you're looking for, when you're looking for it, why you're looking for it. You understand what I'm saying? You will know. You will be a specialist. You know exactly what you're looking for, and you're sitting on your hands and you're waiting for that opportunity. When that opportunity comes, you're going to make the best out of it. You understand? Eventually, when you get this down, you're going to be able to size into these very consistent rinse and repeat setups. You understand? And this is where I feel like people get lost too, or not lost, but they get confused. You have to remember that we're day trading, okay? We're day trading. We're not trying to get into a trade and then hold it for 3 days and get the direction right for the rest of the week or something like that. We're not trying to get in a trade and hold it for 8 hours while it bangs around, okay? Or not even for 4 hours while it bangs around. We want to take trades where we load the boat. We know the odds are stacked in our favor. We're going to load the boat, right? And we're going to nail it, and we're going to get out, and we're going to shut the screens off, and we're going to be okay with that, okay? And we're going to get better and better each time we do it, all right? We're going to get used to it. We're going to train it into our brains. We're going to burn it into our brains and into our muscle memory. You get it? That's what's going on. So we're not trying to get in a trade that lasts forever. We want to get in a trade that only lasts for like maybe 15 minutes to an hour of heavy momentum that goes straight down or straight up. No heat, no stress, as Stacy Burke calls it. That's what we're trying to do. You understand? We're not getting in a trade to hold it. We're getting in a trade to make money. You understand? Consistently. Right? So, Monday, Tuesday, Wednesday, day 1, day 2, day 3, every single week. Wednesday, Thursday, Friday, day 1, day 2, day 3, every single week. All right. Now, Stacy hunts for very specific trade setups. All right. And 2 of those setups have to do with 3 days of breakout traders in the market, right? We have 3 days of breakout traders long in the market and 3 days of breakout traders short in the market, all right? Those are very specific trade setups that Stacy is hunting for over the course of 3 days, all right? And Stacy is using hindsight in his trading strategy. Like when you come to the charts, right? What you're doing is you're looking back at the last 2 days to see if we have a 3-day setup on the day when we come to the charts, okay? So if we come to the charts on Wednesday, we're going to be looking at Monday and Tuesday to see if we have a trade setup. If we come to the charts on Tuesday, we're going to be looking at Monday and Friday to see if we have a 3-day setup. If we come to the charts on Thursday, we're going to be looking at Wednesday and Tuesday to see if we have a best trade setup on that day, a 3-day setup. Okay, I hope that makes sense for you. So let's say on this particular day, Wednesday, just before the New York session, we're coming to our charts. We are looking at Monday and Tuesday to see if we have a day 3 opportunity based on those 2 days. All right, so what are we looking for? In this case, what do we see? On Monday, we can see that we broke out of Friday's high of the day level. Okay, I have these indicators on my chart. It's called previous days high and low. There's no custom settings or anything. All it does is it paints, for example, Friday's high onto Monday and Friday's low onto Monday. You can see at the bottom of Monday, there's a thin blue line at the bottom. That is representing Friday's low. And on Monday, where most of the price action is happening, we can see that other blue line. That is Friday's high, okay? So Monday, we break out of Friday's high of the day. That gives us day 1 of breakout traders in the market, okay? Because we broke out of that daily level. That's what Stacy means. So that's day 1 of longs in the market. On Tuesday, we break out of that high from Monday, all right? Right in the New York session, we're trading through the high of the day of Monday. So that gives us day 2 breakout traders in the market, long, all right? Then you see on Wednesday, when we come, right, we just sat down, this is where we're at, right before that New York session opens, which is what I have labeled for us there in that rectangle when we're going to take a closer look, right? When we come to the New York session, where are we? We are in breakout. We have broken out of Tuesday's high of the day level. So we're at the high of the day. We're also at the high of the week, okay? Going into our session window, right? And so we can see that we have 3 days of breakout traders in the market. And if we come to the chart and we haven't quite broken out of that, we're waiting, right? We're looking for a trade between these certain times. Here on currency pairs, we're looking from 8 o'clock to 11 o'clock. Okay, when I'm trading the US 30 or US oil or any other US based market like that, I am probably waiting for 9:30, the New York Stock Exchange open, to trade those markets. But because this is a currency pair, you know, it'll tell you, even if you just Google it, New York trades from 8 a.m. to 5 p.m. every single day, New York time or Eastern Standard Time. So we're waiting for our session. Okay, we have to be patient. You have to get used to being patient. If we're not in breakout yet, we need to see this market in breakout. All right, that's a part of this. Day 3 breakout traders in the market. So Wednesday, we can see, indeed, when we look at Monday and Tuesday, we do have 2 days of breakout traders in the market, right? So on Wednesday, we see we're on day 3 breakout traders in the market. Now let's take a little closer look. All right, so here we're just looking at day 3, just a little closer. Don't worry about the entries on the chart, okay? But there, that green square that's on there, I've highlighted, that is 8 o'clock to 11 o'clock, all right? That's when we're looking for our setup. Now, the last video I made for you, right, that was all about that trade setup called the 33 trade or the 333 trade. This, to me, is sort of like a variation of that, because we have this second entry right at that third hour, right at 11 o'clock basically, right? But there's an entry at 9:30, okay, 9:30, which is the time I like to look at this. And this is the time that Stacy is always saying too, 9:30, that middle hour, the middle hour. You hear it on repeat. But I just wanted you to see, the close-up of what the day looks like. Now let's take a look at the entries and everything. All right, so here we are looking at that 9:30 entry, okay? If you need to, you can pause the video and like zoom in or something like that. I know it's not really the most ideal picture, but I just need you to see, all right? Remember, the 3 things that we're looking for when we're looking at the potential trade, right? Timings, levels, behavior of price. What do we need to see? Timings, you can see the green box, right? I go ahead and highlight that every single day from 8 o'clock to 11 o'clock on currency pairs, 9:30 to 11 o'clock on anything else. You know what I'm saying? On any US-based market. So that's the timing. If we're hunting the 33 trade setup, we might be looking at the 3rd or 4th hour. But as far as timing goes, we need it to happen inside of this, what Stacy calls the 12 candle window. If you're on the 15-minute chart, right, that 4 hours or whatever is 12 candles. So we're just looking at a trade setup potentially forming between 8 o'clock and 11 o'clock. And this is going to, you got to understand, I'm not trying to take trades. I'm trying to stay out of the market. Trading these very specific setups keeps me out of the market. You understand? It's a part of my risk management strategy, to be honest with you. So the entry here is right there, right around 9:30, all right? There's an engulfment. Where the entry is where the second green bar is engulfed, and I would be in that market, okay? And you can see we get about 30 minutes, 40 minutes of heavy downward momentum, no heat, no stress into this trade, tight stop loss, right? Wide range for potential profits. The reason why I would have been out of this trade where I'm out of it at here is because I've been in the trade 30, 40 minutes at this point. I see the engulfments to the downside, right? Even a W formation there to the downside, signs of weakness, I would go ahead and take my money. I'm telling you that if you get used to executing this, this is all you need, bro, for the week, for the month. You know what I'm saying? Depends on who you are, how you like to trade, how hard you want to hit this, but it's reliable enough for me to really put something on it, okay? So, and you can see, this is what I try to emphasize this to you. It's not like we're looking for a setup that we're going to hold for 3 days. That's not what's going on. That's not a 3-day setup. We're not trying to guess the direction for multiple days or for 6 hours. We are trying to nail this trade, bro. Nail a nice trade and get the hell out of there, bro. Don't give any of it back. Turn the screen off, type of thing, okay? This 9:30 entry, this is where I would have gotten in. You can see timings. We got the timing perfect. Levels, where are we? We're in breakout. We have broken through the high of the day. We're at the high of the day, the high of the week. That's where we need to be for this setup to be valid. You know what I'm saying? Timings, levels, behavior of price. The behavior of price we need to see is an M formation at the high of the day, a reversal pattern, an M formation. You can see here perhaps multiple M formations. Just remember that the M formation on a 1 minute, on a 5 minute, is an engulfment on a higher time frame, all right? We're looking for traders trapped on the wrong side of this market. If this is a sell high opportunity, right, then smart money needs a sucker on the other side of that trade, right? And people are buying and selling at all times. So when this market breaks out of the high of the day, and we're at the high of the day, the high of the week, we potentially have triggered in other time frame traders, daily time frame traders, weekly time frame traders. This is a setup that is driven by other time frame traders, okay? And so that's the reason why I'm taking the trade. We're engulfing those traders who have bought the high of the day unknowingly, right? They bought the top. They're the sucker for the day. Their account is being eaten into immediately when we engulf. That is what traps traders on the wrong side of the market here. All right, here we're looking at the 11 o'clock entry. All right, so you can see that over the course of the session, we had that 9:30 entry. That trade, like I said, lasted for 30, 40 minutes maybe. Then we pull back all the way back up to where? To the previous day's high. We tap that level again, right? And then we engulf. You see it's like a A pattern. It kind of looks like an A. It's very sharp. There's not an M pattern right there that's visible on this 1 minute chart, right? But remember, these engulfments on a lower time frame, that is an M pattern. So if we could take this even lower than a 1 minute, if we could take this down, you just have to visualize it, down to a 15 second, perhaps a 10-second chart, you would definitely see an M there at that level being the high of the day, the high of the week, that is the previous day's high, right? So we go up there, tap that level, engulf, and then trade. And you can see I would have been in at that 9:30 entry because I know what's going on here. I'm used to seeing it. I'm used to actually trading it, okay? And I'm getting better at it still, right? I don't have it perfected or anything like that, but I'm getting better at seeing these specific opportunities, all right? Now, that 11 o'clock entry, that's nice. You can hold it till the close of the day, basically, right? But you end up holding it for 3 or 4 hours or something like that. You know what I mean? But that 9:30 trade, even though it might be a little bit smaller, that's the trade I'm trying to take because look at how hard it hits it. It's just pedal to the metal for 30, 40 minutes. You know what I mean? It's beautiful. I can hit that trade and be on about my day, about my business for real, what I'm going out to do when I live my life. You get what I'm saying? So I hope that this makes sense for you, all right? Just to reiterate it, okay? You won't get a trade perhaps every single week on Wednesday and Friday. That's not really what this is about. This is about having trade setups that you can identify consistently when the opportunity does present, okay? And you will have to sit on your hands in the meantime. And this is not something that we're trying to like get in and hold for hours or hold for days. We're trying to get in, hit it hard, hit it fast, get out, turn the screen off, and forget about it. You know what I'm saying? Forget about it, bro. Don't even look at what the rest of the day did, because you're going to see all these other in your head opportunities, but who cares? You took that trade. All it takes is one good trade. You need consistency. Naturally, after the consistency, the gains will come, all right? You don't want to be a person who puts gains before consistency, because you know what person that is? That's the person who makes a small fortune in trading but never sees any of the profit. They never pull anything out. They never pay themselves, all right? And then they give it all back because they have no consistency. They can make the gains, but they have no consistency. They never hold on to it. You want to be the person who is consistently gaining, right? You have that consistency, the gains will follow, all right? So anyway, man, until next time, I hope you continue to free your